It's interesting, right? I think if you take out, fiscal policy and monetary policy, right? So the government with just recently with the student loan forgiveness, that's a $300 billion give, right? That's massive, absolutely inflationary, right? Among all sort of other cultural issues that it's going to cause, but and how fair it is to essentially push out the blue collar guys who have loans too. But whatever. Yeah, go ahead.
Can I stop you right here? Because you brought up something that really kind of annoys me quite a bit.
Yeah.
You have people that went to school, they knew exactly how much it was going to cost. They're educated people. And, you've got this bailout to help these educated people when we've got record amounts of homeless people who can't help themselves, who would have far greater impact, in my opinion, if you focused on them or open up the borders a little bit. And, I'm not going to get political. I'm just going to be economical, but there feels like there's better way to spend that money is all I'm going to say.
100%. And Shamoff came out and kind of broke it down wonderfully. He said, look, back in the day, college had an ROI. Pretty straightforward. You spend 10, 20 grand, you come out making $40,000 extra per year. It made sense, right? When you forgive the debt like they're doing, all they're saying to these institutions is jack up the rates. You just paid off all of their investment to these students. Their endowment funds are going to grow. So you just gave all that money to the Harvard endowments, the Yale endowments of the world, which is that in my mind is fascinating. But $300 billion, aside from which party you're on, that can solve a ton of issues right now. And we're just going to give it away to inflationary pressures that have really no impact. I'm blown away by it. My point is, without getting on a tangent too much here, you have a disconnect from what the Fed's trying to do and the government bills that are very much inflationary. And we're disconnected. And I don't see a world that we start going down in rates for about 12 to 15 months at least.
Yeah, it's going to hurt us. I got to tell you, in the last 12 months of us doing the podcast, I feel the most organized we've ever been. I feel like the content looks better. You look great. I don't know what kind of moisturizers you're using.
It's this new camera. I had this plug for the free plug, by the way. This is the Lumia, about the same price as the Brio, but yeah, really phenomenal.
Well, you've got excellent skin. You look like a 28-year-old.
Try, man.
I really like the format that we had today, where we had a subject matter expert in a non-real estate focus asset class, and gives us some context into that, because individual investors always want to know, hey, I want to hit a grand slam too. No, you don't, because here's how we're going to wrap this up, by the way, because what he said, and this was so fascinating, this is a $250 million fund. He said one company is going to make that fund, or at least that return of that fund to the LPs, make it all worthwhile and get that, 10, 20x, which means 34 of them really probably aren't going to do much. He said, some of them might do, 1 to 3x, which means we'll be lucky if we get our money back, right? Which doesn't do anything. And then most of them are going to be dogs, which is so wild to me. I mean, this is a company. If you go to B Capital's website, look at the amount of Ivy League and educated.
Yeah,
they got everybody. And plus they've got Boston Consulting Group. And they still, if you take that from a batting average perspective, I mean, it's worse than Joey Gallo. Forget about Mendoza. And the Mendoza line, it's well below that. Forget about having success as a weatherman, being 50% accurate and 50% wrong. You're talking about 1 out of 35, that success rate that's bonkers.
Yep.
So that to me says stay away, because you have a 3% chance of success what are you left with? I will say that although these guys may think they have the best access to deals, and which they very well may, right? I mean, there is performance persistence in the VC world. You could say that funds that have had success, follow-up funds, tend to continue to have additional success because, it just starts to attract different capital. So if you're getting courted by some of these large VCs, then the other ones come into play, and it's kind of, this herd mentality. And so, yeah, there might be some self-fulfilling prophecy.
What you see though, right? Like you see that when there's a leadership team that has a win, that's recognized. And a lot of people that I know have been funded by these bigger companies, Sequoia, Andreessen, BCAP, their previous leadership cohorts that have already exited successfully. And so when we ask them the question, what's the number one variable, we look at people, because if they have a proven track record to this scale, the chances of that 3% probably go to like 15, 20%.
But I'm curious to actually look at the data on the follow-up companies of founders having additional success. Obviously, Elon Musk is, a great example of that. But I am curious. I really am to actually see the data of founders, but I think it's more the ecosystem, right? Ideas are a dime a dozen. Execution is something completely different. And then adoption is something, so you add in the factors, all these, the founder and the quality.
And timing.
And timing, right? The vintage, right? Because there are ideas 10 years ago that were moronic that are probably coming to fruition and anyway, would be great investments today. So, as the individual investor, these crowd sourcing platforms from a venture perspective, to me, they're just filling buckets. And, is there some analysis and perhaps some quantitative metrics that you can have? Sure. But, when you look at these crowdfunding platforms, is there really some strategic investment going on? Are these folks at these crowd funding platforms, are they taking a board seat? Are they helping these these companies actually succeed? I wonder about that. I'm not saying one way or the other. I just wonder, but I really enjoyed today, Tom. I think 100%. We kind of found our niche and to figure out continually kind of to repeat this process. To our listeners, we kind of just get on here and wrap what's ever on our mind without some real, structure. But I think when we put a little bit of time in to the research and getting high quality folks like Morgan from B Capital, I think it gives us some stuff to talk about and to be a little bit more educational. So we hope to continue to provide great content, education for you guys. You know where to find Tom. His website is right there. I'd love to hear from you. You can find me at mflax@netequitycapital.com. I'd love to, chat with any folks who are interested. I love talking about investments. People always say, Tom, hey, I don't want to talk about business anymore. I don't want to talk shop. Do you ever hear that?
Oh, yeah.
You know what I tell those people? You're in the wrong shop, pal, because you're not having any fun. All right, man. Till next time. Thanks for listening.
Yep.